Charles Nenner is one of the most respected analysts in the world. He is predicting some dramatic changes in the near future, truly dramatic. In this interview, he shocks with a gold prediction, stock market stats, and Bitcoin predictions. It's a must listen. Make sure you know exactly what the greatest threat to the US dollar that mainstream media isn't reporting on is. Go now to portfoliowealthglobal.com/CaliCoin. It's essential reading from Tom Beck, founder of the newsletter. Enjoy the interview.
Welcome to the Industry Experts panel at PortfolioWealthGlobal.com. My name is Michelle Holliday. Today we have a powerful interview for you because we are welcoming Mr. Charles Nenner. Charles is the founder and president of the Charles Nenner Research Center, which focuses upon the analysis of cycles within commodities, equities, bonds, and currencies, all in relation to predicting future cycles. His research is so accurate, it is used by hedge funds, banks, and brokerage firms all throughout the world. Charles, welcome to the show. How are you today?
Very well. Nice to be with you.
Oh, it's great to have you here. Charles, you have gone on record as saying that the three broad indices, the S&P 500, the NASDAQ, and the Dow Jones, will all go back to 1999 levels. Are you sticking by that prediction?
Yeah, at least. They could even go lower. I don't want to worry people, but we have a lower target on the 99 levels.
Wow.
So we're out of the market since January this year, which was the high of the cycle. And it's testing the highs again, and I don't think it's going to make it. For traders, we play it on the upside also, but we're very, very careful. And all the good news is already out in the market. So whatever you hear, why everything looks good, I tell people if there's something you don't know, that might help you. But whatever we hear is already in the price.
You know, Charles, turning to precious metals, gold is at $1,200 per ounce and silver is below $15. We're in a bear market. What are your systems telling you?
Well, we sold gold at $1,365. We're still short. Our short-term target is $1,153. That's about $50 lower from here. We think after bounce will go lower. It can go to 1,000 or 950. And a new up move has to wait for another 6 to 8 months.
Now, Charles, we've heard you say on numerous occasions the phrase, "This is what the system is telling me, and this is what our computers are telling us." What is it that you have programmed in, and exactly how accurate does it tend to be?
Well, we programmed, this is already started in the beginning of the 80s when I still did it by hand. And then I went to Merrill Lynch, went very well. Then I had my own brokerage firm. I retired. And in 1998, I was invited to come to Goldman Sachs, and I made a new career. And after that, I started my own firm. So I still have the same programs. The programs are built on the fact that there's no free choice in financial markets, which means is we know when something is happening, it's going up or down, and we know based on my formula, if it goes up, how high it will go. Now, of course, if something reaches the top, then we're going to see reasons in the media and the papers why the market goes down. But that's not the real reason. The reason is that the cycle is stopping, the atmosphere becomes more negative, and people start thinking, what could go wrong at the moment? So the news could stay the same, but the interpretation is much more negative. I'll give you one example. If we own IBM, and IBM is up 50% in a year, and tomorrow the numbers of IBM come out, and they're great. Now the question is, what is IBM going to do? Well, you would say they have great numbers, so it's going to go up. Now, if the cycle is up, then the Wall Street Journal say people poured into IBM because it's doing great, and the price went up. What if the cycle turns down? They still have the same great numbers. Well, then it comes down, and how do they explain it? Well, people took profits because they don't think IBM does better next year. So the facts are the same at that moment, but the interpretation is totally different.
Interesting. And you've used this ever since the 1980s?
Right.
Wow.
Right.
And it continues.
Well, I retired a couple of times, and then they brought me back, and it's time to retire again. So, you know.
It's like, Charles, we need you. What's going to happen here?
Right. Actually, that's how it is. Yeah.
It's a huge compliment. Now, Charles, the Federal Reserve is the only central bank hiking interest rates. What is the advantage to that, and what are the risks?
Well, you asked me something interesting because according to what I explained, it doesn't matter what they do because they have no free choice. It's not like the Federal Reserve is a Freudian figure that takes care of us as a father figure. We know what they're going to do. We know when they can make mistakes, we cannot make mistakes. I even think, and this is maybe a bit too much to say, but I think my systems are better because my system can tell you where the unemployment, where the GDP, where the inflation is going to be in a year and in 2 years. And for one reason or the other, the Fed always looks from months to months, or they only tell us from months to months. But they always have meetings, and I don't think they base their forecast on how it's going to be next year. Which, by the way, is how Wall Street works. Wall Street buys and sells based on the news of next year, not of the news of tomorrow. That's I'm always surprised why everybody's busy with the news of tomorrow. And I ask them, you know what the inflation is going to be next year? They don't know. So what does it help? It doesn't help you. So the Fed is just fine-tuning a little bit, but I don't think they have a major deal to do because the markets force the Fed to do something with interest rates usually.
Now, what is your perspective on the REITs, the real estate investment trusts, paying high yield right now? The MLPs, also the master limited partnerships, are paying extremely high dividends over bonds. What is your perspective on this?
Well, I'm seeing something. I just published what happened in 2007 that the banks did badly. If you look at the stocks, Nenner, Toll Brothers, home builders, they're already down, I think, 20-25%. Same thing, nobody seems to wake up. The insiders usually use stocks. Insiders on oil, they go into oil stocks and don't pay crude. And insiders in real estate, they use stocks that are in real estate and not real estate. So the public is still saying, oh, real estate is hot, it looks good. But in the meantime, 20-25% are the stocks already down. That has to give a message. So I think we're at the end of the move again. And it's time for people to wake up again. In 2006, and another television show, I don't want to mention it, big show, I mentioned already everybody out of the housing market. You couldn't get them out. I have the same thing. You know, people think it will last forever. So whatever is going on in markets, people assume it's going to continue like that, and they don't pay attention to turning points.
Exactly. So you predicted the 2008 crash also.
Exactly at the level where it started at 14,300, an exact day. Can I mention where I said it so people can look it up?
Yes.
Okay, I said it in July 2006 on CNBC. The Dow was 10,000. I said it's going to 10,300, and it will be there the 27th of December in 2007. And that's what happened. And then you can go to CNBC's on my website on December 27th, and that's where I was. And then it says what's going to happen. It says the whole thing's going to crash. So it's not so great, or the system works or it doesn't work. And it has been programmed already for many years, and it works very nicely.
That's extraordinary, the day. You picked the day.
What extraordinary is that from this we have to conclude that whatever we, investors and people, do doesn't make any difference. Because I didn't know in 2006 what the economy is going to do 2 years later. Now, what even more extraordinary, you would say, is that on that same CNBC from 2006, the Fed funds were at 6.5%, and I said they go to 0. Now, that I think almost never happened, and that's exactly what happened into 2009. Don't look at me, it's the computer who told me that.
It's your ingenious program telling you that, Charles.
Yep.
Now, shifting gears, what do you see as far as Bitcoin goes? Do you see any value in it?
Well, again, here we go. I'm not an expert in all that stuff. We do the Bitcoin. We're doing exactly the same. The day it goes up, the day it goes down, how much it goes up, how much it goes down. And it's on our research 4 times a week. Why it happens, there's really no fundamental analysis about this thing, why it goes up and down. So it's not much competition about people, and they don't come with any strange stories. It's just the same system. We know the cycles. We know when it goes up. It took a couple of years because we need a couple of years of data in order to calculate it. And now it's in our research. So we tell them exactly when the bottom is, when the top is, how high it low goes, and how low it goes. Why? I have no idea.
Now, Charles, Jeremy Siegel, in his book entitled Stock for the Long Run, sees Asian buying as bidding for all of the selling that will be done by baby boomers that are avoiding the demographic cliff that many are predicting. Do you agree or disagree?
You know, whatever I would say is based on these, I wouldn't call geniuses, but the people that do the research, because I'm not better than they are, and I can only repeat what I read. It's not my expertise. My expertise is what's going to happen and when, and I leave it up to the pundits why it's going to happen. I try to make money, and especially make sure people that are with us don't lose money, and I leave it to other people to explain why it's going to happen, why it's not going to happen.
Ah, okay.
Because I'm not sure that there's a correlation. Because if you look at how people pronounce it, in the media they say, as Trump said this and this and this, the market sold off. They don't say because Trump said this and this and this, so they assume there could be a connection. As Trump had the problem with Canada, the market was weak. So they say two things happen at the same time, maybe there's a correlation, but nobody's sure that that's the correlation. So what happens with the media is the market comes down, and then they're going to go around, because I've been a journalist also, financial journalist, before I went to Goldman Sachs. Anybody has an idea what we can write about why the market came down, but nobody's sure that that's the reason.
What are your thoughts regarding President Trump and his economic and trade policies right now?
I don't want to be boring.
That's not boring.
No, but let me start with the Carter and Reagan example.
Okay.
Carter was president in cycles that came down. Whatever he did, even when he wanted to get the hostages out of Iran, there was a collision of helicopters. There was a big catastrophe. And then Reagan came, and whatever Reagan did was great. Not because he was so great in the beginning, but because cycles were up. Now the question is, did he change the atmosphere in the United States, or did the atmosphere change, and that's why we voted for Reagan? So my program says the cycles turned up, and that's why they started voting for somebody who was more positive than Carter, who was a bit grumpy all the time. And he had the same thing as Clinton. The cycles were up, so you couldn't do anything wrong. So it's not that Clinton had the area of good economics, just his cycles were up. So whatever Trump is going to succeed and not going to succeed depends on the cycles. So for the moment, the cycles are up, but they're not going to stay up.
I see. So it's sort of putting the cart before the horse. You see it in reverse.
Right. Yeah, it's just in reverse.
Charles, can you please describe your systems and what they're forecasting as overall timing in regards to the giant collapse that appears to be looming over all of us? Will the markets keep going higher now, or could this happen at any day? How close are we?
I think we're very close, and the cycles are down into 2021. So when I'm on other stations, they say, so Mr. Nenner, how do we make money? And I always say, listen, I'm Dutch. We try not to lose money. Because you never hear in the United States, how can we not lose money? What we're going to buy, how we're going to make money. It's a dangerous situation, and I wouldn't be totally invested in the market. By the way, there's an interesting research we did that shows that the small investor has about 8% cash that totally invested, while the big investor, the knowledgeable investor, sits on a lot of cash. They just getting cash and selling their stocks.
Now, getting more specific in that question, so you specifically believe that the crash is coming, did you say 2021?
Until it ends in 2021. So if you want to be safe, you stand aside till 2021.
Okay. Now, speaking of cash, how much is a good percentage of a person's net worth to put into cash, and how much into precious metals?
Well, the two systems. One system is proposed by people who don't know anything about timing, and they say it's not possible. So put a little bit every month in metals. We time the market, so it says for the next year, don't put anything in metals when it's time, and you look at the research, will tell you when to get in there. And for the rest, I would say buy a 1-year note, gives you maybe 2.5%, and be safe for the next couple of months and see if the whole thing turns out like we think it is. I still think there's no inflation. My indicators that I show there's no inflation. I have discussions with people that show this inflation. They never show me where it is. And when this economy turns down from an inflation that's around 2% and a GDP that is weak, we're going to have deflation. I think we're going to have deflation, and in deflationary scenario, everything goes down. There's nowhere to hide. What the big guys, I would call them the big guys, do is the institutions, when they go out of stocks, they buy small apartments and they rent it out. They also agree that real estate will come down, but they have the rental income, and they know in a couple of years the price of the real estate goes up again. So actually, that is something I can tell people to do: buy small apartments, although they're expensive. Take the rent, be safe, and don't worry if it goes down, because after 21, 22, it starts going up again.
I'm very interested in this timing because you've been so accurate through other major events throughout our recent history. When do you believe this crash will start? Because if it's going to be over by 2021, what's your prediction on when it's going to begin?
Well, it's not a crash starting. It's just a slowly distributing of stocks, which started, according to me, already in January. We're still a little bit below the high of the Dow in January. And right now, I see a lot of distribution, which means I see a lot of big institutions selling. Now, there is what's called the Buffett indicator, which most people are not familiar with. The Buffett indicator is taking the whole capitalization of the stock market divided by GDP. And it's more extreme than before the crash of 2000 and more extreme before the crash of 2007. So it's very extreme. And other indicators are also very extreme. Once it starts crashing, especially with today all the computer programs, you're too late. You can't get in, you can't get out. They might close the stock market. So then it's a bit too late. So you have to be already out of the market before the whole thing starts coming down.
So we're already in it.
Well, I say according to my cycles, we saw the high already in January.
Okay.
Now, I can give you a number on the S&P.
Yes.
That if the S&P closes below 2,800, I think today's 2,880, then I think we've seen this high again and we're going down.
Wow. Okay. It's interesting. Now, Charles, this has been such an amazing interview. Please tell us about your website and how everyone can follow your work.
Well, I think you can go to charlesnenner.com. There's also Charles Nenner Research Center, and you can say that you saw you and me on this what is it, postcard or post or it's not a television show. What should I call it? On the show?
A podcast.
Podcast, and we always like that. You can get for a pretty long period. You get the research for free because we're very easy. It proves itself. So just take a look. What we always say is, take a look at the research for at least a month, 2 months before you start investing, so you get a feel of how it works. And then maybe you get a approach that if you want to continue, not going to continue, and then you can discuss it. But for a while, especially now until the end of the year, since things become dangerous, I would say take it for free and see if you like it.
Okay. Now you just hit on something that I was getting at. You believe by the end of this year, our economy is going to be very dangerous. You believe it's this close.
Well, it's not always the economy. You know, most the bear market starts when the economy is too hot. So if it overheats the economy for a couple of months, it also leads to sell-off in the markets because people think now they're going to do crazy things with the interest rates. So you never know if it's going to be a weak economy, a strong economy. Cycles tell us it's going to come down, and we'll discuss that later, why it came down.
Charles, it has been such an honor to have you on this show today. Thank you so much for joining us.
You're welcome.
Mr. Charles Nenner, founder and president of the Charles Nenner Research Center. For the Industry Experts Panel, I'm Michelle Holliday at PortfolioWealthGlobal.com.
Charles Hugh Smith on the Wealth Gap, Bill Murphy of Geta.org on gold manipulation, Steve St. Angelo of SRS Rocco Report on the energy crisis, Mickey Fulp on gold bottoming, and Mark Faber on bear market preparation. And many more recent interviews are available on the channel right now. To stay up to date on Tom Beck's intensive research with his team on the general markets, dividend plays, cannabis stocks, blockchain companies, and precious metals under the radar opportunities, make sure you are a subscriber of the flagship free newsletter at portfoliowealthglobal.com. Thanks for watching.